All right, this is the last snippet we're going to do for the accounting equation. And this accounting equation, we're going to finish going over it. All right, so we have our situation here. And if you've seen the other videos of the snippets, I'm just going to continue off of those. But it's not important if you didn't watch them to know what's going on in this one, okay? So what we've had in the past is what we've done is we've done work for somebody that didn't pay us yet, okay? We increased our revenues by a certain amount, and then we increased our accounts receivable by that same amount, okay? So they owe us money. What happens when they actually pay us that money? Let's say, I can't remember, I think it was $3,000. So let's say they have now paid us $3,000 for that work that we did. We are not booking revenue again. We've already booked it. We're just dealing with the asset side of the accounting equation again, all right? Right now, if they owed us $3,000, oops, let's do 3,000. And this was in our accounts receivable. Remember, I'm going to say A/R is accounts receivable. So we have $3,000 in our accounts receivable. So I'm going to do that. What we're going to do is if they give us the $3,000 cash, we're going to reduce that accounts receivable by $3,000 because they don't owe it to us anymore. Think of it this way. If you owe your best friend $5 and you give them $5, they want to think, okay, they've paid it to me, so I'm decreasing what they owe me by $5, right? You don't want them next week to say, hey, you stole me $5. Like, no, I didn't. I paid it to you. Then you have a big fight and everyone gets upset and it's never a good situation. I'm kidding. I try to make these things fun because I can only imagine you guys are probably like, oh, geez, I get to watch videos in accounting. But these help. I hope these help anyway. We're going to increase, because we decreased our accounts receivable, we're going to increase our cash. Boom. All right. Same side of the accounting equation. One went up, one went down. We're still in balance. Basically, it offsets. We're at zero, no change on both sides. One went up, one went down, okay? All right, same thing what happens over here. What happens if we're paying off a liability? So we had $1,500 expense that we recorded when we were dealing with our electricity, okay? We're in Phoenix, so of course, our electricity is through the roof in the summertime, all right? So what happens when we pay that off? We have $1,500 that we owe the electric company, all right? SRP, APS, Tucson Electric, whoever, all right? So our current balance in our liability account is a plus 15,000. We're going to pay that off. We're going to subtract that $15,000, $1,500, excuse me, and we are going to subtract $1,500 in cash. All right? Liability goes down, asset goes down. We're still in balance. Cool? All right. That's what happens when we pay what we owe or we receive what we are owed. That's how we deal with it. When we do that, we're not dealing with revenues and expenses anymore. We are focused solely on just the assets and liabilities in that time period. The last thing is, at the end of an accounting period, right? Especially if our end of the accounting period is the third quarter, right? So we're talking like the end of September. The business owners are tired, they're burned out, they want to go on a vacation. What are they going to do? They're going to pull money out of the company so they can go on a vacation, right? They're going to bonus us. No, they're going to go on a vacation. So let's say we want to go on a vacation, and let's say we're going to take out $6,000 cash. What we're simply doing is we're decreasing cash. And like I was talking about when we were talking about expenses, we are going to increase the owner's withdrawals account, because by increasing the owner's withdrawals account, we're saying, hey, the owner withdrew $6,000. So when we take our owner's contribution, we're going to subtract out that owner's contribution. And that's going to reflect the deduction in the overall equity of the company. So by increasing owner's withdrawals, we decrease overall equity and we decrease our assets. So we're decreasing equity, we're decreasing assets, we stay in balance. Okay, I hope these videos helped you out. Most, say 90% of the stuff we're going to go over in Accounting 111 is covered in all of these snippets I did with the transactions. If you ever start to kind of get lost and need a refresher, come back to these snippets. I make them short just for that purpose. So this is something you should be able to do kind of quickly, maybe repetitiously, to help you get through it. All right. I'll just introduce the next one when we're ready for it.